It was said that no one knows tomorrow. And if you look at the global geopolitics and bitter Brexit and trade fights started within Washington and Beijing, now spreading around the world, Japan and South Korea and elsewhere between India and other countries, now you find the world a very uneasy place for investors and analysts trying to scratch their head, trying to make a sense of the entire new world disorder. Let's get a sense of where we are at the moment, at least. Let's read it. Let's go this one day at a time. Uchenna Menes is the chief markets analyst at Eagle Global Markets, and it's live to us from our studios at the Nigerian Stock Exchange. Uchenna, good morning. This is as good as the saying goes that no one knows tomorrow, but we know exactly where we are today. So let's talk about today, and if you can give us a sense of what tomorrow will perhaps look like with the geopolitics, bitter, unfriendly, disorderly Brexit, and the trade fight made in U.S. and China.
Thank you for having me, Bosso. From your quote, you understand that if you want to know tomorrow, you need to look at the past. So as it is, as it's going right now, we have significant heightened risk in terms of geopolitics. You've mentioned a couple of them: trade war escalation with U.S., China. We have South Korea and also Japan also trying to increase tension. You have Iran and the U.S. You also have the EU and the U.S. also trying to negotiate in terms of trade deals. So all of this increased geopolitical risks are significantly adding pressure in terms of global growth in the holistic perspective, if you look at it that way.
So, which of these geopolitical or whatever issues do you think is the biggest story for us, for everyone to think very deeply about? 2 days ago, or on Monday to be precise, the IMF released a new World Trade Uncertainty Index. And I'm sure you've seen the numbers there for a few African economies such as Nigeria, Angola, Ghana, and South Africa. In terms of the uncertainty around trade, the IMF concluded that the world's economic growth for this year could be shaved by as much as 0.75% if the trade uncertainty and the trade fight continue.
Yeah, so as you asked that question, the US-China trade war will take the big stage in terms of intensity and significant ripple effect or detrimental effect, as it were. The IMF's report has shown that the index in its way when it concerns to emerging markets is going to dwindle if you continue to have the escalation. The truth is the US and China are the two largest economies in the world right now. And there is no how, if they continue to increase tension between themselves, that it won't spread into emerging markets, frontier markets, and even developed markets. There are some economies that are literally reliant on this economy. So you have Germany, for example, that is currently hovering between manufacturing and technical recession as we speak. You also have South Korea and other South Asian regions significantly slowing down in terms of manufacturing and export orders. And these are material indications showing how growth is significantly slowing down. So yes, it's quite important that the IMF needed to review the uncertainty index to show what it is as regards to emerging markets and frontier markets for growth.
So if you look at the cocktail of issues we have, so let's drill down a little bit more. Trade is there on everyone's in everyone's crosshairs, but again, this is a very bitter, disorderly, and chaotic Brexit. So bring this into the conversation here, Uchenna, in terms of how financial markets, investors, here you have not just Nigeria, but a number of sub-Saharan Africa's Eurobond listed on the London Stock Exchange. We're still planning a few more InterSwitch. This is a very big company in terms of payment solutions and all that. Thinking of a London IPO, Dangote Cement has been talking about a likely London IPO over a couple of months now, 1 or 2 years. We don't know when that will likely happen. So, how do you see Brexit in the entire market, investors' positioning here?
Brexit is a no deal breaker. Basically, it's going to be negative sentiment. You can't even beat around it. Short term to medium term, let me put it that way. You will expect that to drag prices and growth in terms of that reach. Brexit in itself. If you want to look at it, you would understand that Britain leaving the EU was not premeditated. It's something they've literally created that exportation and trading hub with the European Union. So leaving the European Union will come with significant demerits, and that's what we would get to see. Even Mark Carney, the Bank of England's governor, has come out to say if Britain forces itself out of the EU with a no deal, which Boris Johnson is trying to orchestrate, that is literally going to take the UK economy into recession. And that's the governor of a Bank of England. So there is no looking at it or looking at one side of it in terms of hope. Long term, obviously, there could be that rebound in terms of growth. But if we want to take the actual immediate near-term effect, it's going to be a significant slowdown. Every investment opportunities and other things that people are looking to do concerning the UK economies would actually dwindle in that space and time.
Okay, so looking at this entire global space of political economic disorder, and I look at the presentation by Nigeria's finance minister, Budget and National Planning Minister Zainab Ahmed yesterday, saying, look, the country's shaving is 2020 oil production outlook from 2.3 million barrels to 2.18 million barrels per day. Oil prices, $60 per barrel for 2019 budget. That's cut to $55 per barrel for next year. Do you think the Nigerian authorities are beginning to look at these externalities, these external vulnerabilities and risks as reality that they have to deal with and make adjustments in terms of economic and fiscal planning?
Yeah, the truth of the matter is they have to pay attention to global headwind risk, and that is really biting in. But I think they are trying to bite more than they can chew. I think it's hopeful wishing if you think you would be producing at 2.2 million barrels per day. That is most likely not going to be possible. If you follow recent development, you'll find out that Saudi Arabia just recently replaced their oil minister just because they are concerned with the oversupplied situation in the market. They're trying to get more hawkish as to oil prices to probably eliminate deflationary risk as we're getting to see in oil prices. And that is with Saudi Arabia assuring the market that they would continue to cut production significantly all through 2020. Right now, we should be producing at 1.6. So when they are wishing for 2.1, 2.2, I don't know where that's going to come true, because significantly, if you really want to keep oil prices, given the surrounding recessionary risk, you need to cut production. And there is really so much OPEC can do with supply side of this whole equation, because the demand side is significantly getting hit due to all of the geopolitical risk we've been discussing earlier today.
So if I'm interested in trading the global marketplace, where is the safe haven right now? Gold around $1,600 a barrel. Citibank yesterday, per ounce. Citibank says yesterday wrote an investment note that the bullion could touch $2,000 an ounce next year. Is it currency? Is it the U.S. Treasury? Where do you think I can make money and have some measure of good sleep? Uchenna.
The safe haven is actually your best bet right now, because there is so much uncertainty when it comes to global slowdown, recessionary risk, that pushing portfolio to precious metals kind of just give you that store of value, intrinsic value for your investment in terms of your returns too. Another thing that is going to be helping gold is the Federal Reserve. The Federal Reserve has, in their last FOMC interest rate decision, cut by 25 basis points. Although Jerome Powell, who is the chairman of Federal Reserve, has highlighted that was a mid-cycle adjustment in terms of policy. there is a high likelihood, almost a 95% likelihood that he will get to cut again in 2 weeks' time, or next week, just next week, for another 25 basis, at least another 25 basis point. And that in itself is showing to the market that the Fed is in its own rate cut cycle, and that is bullish for gold. So if you're having increasing heightened market risk, and you're also having a Fed that is cutting, a depreciating USD and a heightened market risk is double combination for a bullish outlook in gold. So yes, I don't doubt if we get to $2,000 per ounce. We already had our year to end target already hit sometime in August in terms of 150 per ounce based on that gold. So if you get to that space, you will understand that those factors will continue to push prices of gold. So yes, your safe haven of precious metal. Silver too is a place you can always run to in that space. And yeah, precious metals will give you that safe haven assets right now for considering the current conditions in the market space.
Yeah, quite a lot to chew there. Thank you so much, Uchenna. I mean, it's a final one. Do you think emerging markets or frontier markets, equities or debts, has any potential upside for the rest of the year? Look at Mozambique try to get all its debt issue and crisis and scandal out of the way. Egypt is about to do between $3 to $7 billion bond raising and all of that. Do you think frontier markets, emerging markets, has a measure of upside for me between now and December the 31st?
Ideally, assets in emerging and frontier market are under-owned and undervalued. So they actually poise a very significant, should I say, material investment opportunity. But there is still the issue of recession coming and hitting the door. So if you have that still brewing and looking to materialize, investors are going to get more conservative and cautious, and it will lead to risk of sentiments, and they would not possibly try to invest in a risky, should I say, scenario when it comes to emerging market and frontier market. So maybe saying this year might be too early to say, but if we get a sort of relaxation in terms of this recessionary risk looking to materialize, I believe it's a good place for assets to be owned, and I'm sure we'll see significant inflow in portfolio and capital inflight into this space. Thank
you so much. Uchenna is a chief markets analyst at Eagle Global Markets from our studios at the Nigerian Stock Exchange. Thank you so much. Do have a great day. Yes, of course, it's a very big day for Nigeria. Of course, the first Federal Executive Council meeting, what you call the FEC meeting or the Cabinet meeting, the first since President Buhari's second term swearing in on May 29, and the inauguration of the new cabinet will take place today, Wednesday, September the 11th. The first Federal Executive Council meeting is taking place today. So that is one big story. What will be the decisions later today on moving forward? This is the first time that Mr. President would formally meet in the cabinet room with all the ministers since he inaugurated them a few weeks ago. That's one big story you want to keep in your crosshairs for today. But let's get back to the global space. Juliana Olayinka, my colleague at the London studios, is here to take us through a few headlines this Wednesday. Good morning, Juliana. It's good to have you on the show.
Good morning, Bosun.
Great. British Airways says, let's hit the ground running. British Airways is back in the skies. A number of flights are up and running, but the airline says the crisis by the pilots is not over yet. What update do you have for us?
Well, the most damaging strike in British Airways history ended at midnight, but the chaos does continue this morning, Bosun. We've been hearing that about 50 flights have been cancelled this morning. These flights are short-haul flights, so any flight that's leaving from London Heathrow to Barcelona, Munich, Rome and Stockholm has indeed been grounding. This is expected to affect about 7,000 passengers. And, you know, the embattled airlines problems continue. Of course, they lost about £100 million worth of profits over that 48-hour strike, which grounded about 250,000 passengers on Monday and Tuesday. And of course, with all of that uphill worry and troublesome issues, they're struggling to get their flights working today. Of course, BALPA, the union that are representing the pilots, insist that they will indeed go ahead with a second strike on September the 27th if British Airways doesn't give in and gives those pilots that pay increase that they want. What's quite interesting, though, is that International Consolidated Airlines, the company that owns BA, their shares were up 2.2% this morning. So really, the traders are just happy that 48-hour strike is indeed over.
Very interesting scenario there with the British Airways. They've got a lot to deal with. But again, all the news yesterday night, my dinner time here in Lagos, across all the major channels, the CNN, you're talking about CNBC and Bloomberg. It's all about the new Apple or iPhone 11 and the wristwatch and all that. I don't have any of that yet. And 3 versions and all that is going to cost. I just watch all that on TV on the unveiling. So are you biting any of this Apple new products, Juliana?
Well, it cost a lot of money, and I agree with you, Bosun. Apple, as they always do, they broke the internet last night after they unveiled these 2 new products. You know, they're the first company to have a triple camera iPhone. So all our selfie lovers will be very happy with that. But I think what a lot of people are talking about really is the pricing of Apple. Apple were the first smartphone company to have a phone that cost $1,000. And they released that in 2017. But what they have said now is that they want to really kind of widen their audience. They now have a TV streaming service, which is going to be costing people $5. And by doing that, they've undercut their competitors, Netflix and the likes of Disney. And of course, the Apple iPhone 11, it is still expensive. It will set you back $1,100. But if you want to save some pennies, like us, Bosun, you can have an entry-level Apple iPhone, which will still cost a lot of money, but it will be $700. So Apple definitely widening their horizons.
$700? That's taking me to the north of 200, close to 300,000 naira. That's just about 250 or thereabout. Okay, you folks can keep those iPhones for now. I can still do with, I think I got an old iPhone 6 or so. And when I talk about iPhone 11, by the time I get back into the market, I don't know where iPhone would be, perhaps iPhone 100. So I'm holding my iPhone 6 just somewhere down there. I'm still happy with it. Thank you, folks. Thank you, Juliana, for that offer of 700 iPhone. I'm not sure I can do that under the current situation. So where are we as far as the UK equities and currency and pound sterling is today with the Brexit that you folks are dealing with, and we're just sniffing it all around the air here?
Well, quite interesting. The FTSE opened 45 points higher this morning. And even though we may be trying to steer as further away from Europe as possible, indeed, the European Central Bank still has a lot of influence over city traders. Of course, they've got their ECB gathering tomorrow. And with all this issues around the German economy and are they or aren't they heading into a recession, it is thought that there may be some sort of rate cut at the ECB. So market traders are really anticipating that, which is one of the reasons why the FTSE opened higher. Also, as well, sterling is doing pretty good this morning, trading 0.13% higher on the dollar. So £1 will get you about $1.23, which is pretty good. And also, we're up on the euro by 0.05%. So £1 will also get you €1.11 today.
Oh, great. Thank you so much for Juliana for keeping the window, the London window, for us here on the channel. Thank you very much. And on the show, in the afternoon, you'll be having business lunchtime with Chimeze Obiwago. Let's take a break. Be right back.